All right, number one, keeping older credit cards active. You might not realize it, but maintaining older credit cards instead of canceling them work out to your credit benefit. Why is this? We get this question where we're talking to a buyer, we're getting their custom search set up, and they want to make sure that they're in the best position to get the most financing options. And they say, I've got a bunch of cards I haven't used in a while. I'm going to cancel them. Is that a good idea?
That is definitely not a good idea. There's so much power. I mean, a portion of your score is length of credit history, right? And so that's a big one. The more length of credit history that you have, especially positive, is going to greatly impact your scores in a positive way.
Yeah.
And then on top of that, you have your I call it revolving debt ratio, right? So more active or available credit available. And then if you keep it low, right, you keep it open, that's going to benefit your scores too. So a lot of people, I know we've heard that a lot. And when I hear that, I'm like, no, don't do that.
Don't close it.
And a lot of times because they think of it like, well, I don't use this and maybe I shouldn't show this because maybe it's bad. Like I have too much out there. And it's like, no, actually, you're doing a great job with that. Keep it open, maintain lower ratios and keep that activity. It's going to help you out.
Having open available credit with little to no balance on them, those are great things. And like you said, your credit score, a big portion of that is determined by the history.
Yep.
So if you've got a card that you've had 5, 10, 20 years, I think I've got a card. I've got a card that I got when I was 18.
That's awesome.
And so that, of course, that means I've had that card for 300 years. And it's got a lot of history on it. All right.
Well, if you think about it too, think about it as if you were lending your money out to someone, right? If you saw and you looked at a credit report and you see, hey, this person has multiple accounts in good standing. Yep. They've had it for like 20 years, little to no balance, right? Or low balance. That shows that you've been responsible, right, with your finances. I feel comfortable now to lend you money. Hey, you're going to pay me back. This looks good to me.
Yes.
That's all it is. Yep. It's painting that picture so that way you're more credible to lenders.
Number two, you don't apply for credit a lot. When you apply for credit, a lender receives your credit report. It's called an inquiry. And so you'll see this. I get it 2-3 times a week. I'm checking out at some place and they say, would you like to save, $100 or would you like to save 25%? Or, it's still 2-3 times a week this question is asked. Some people think, well, if I just apply for the credit, but I'm not going to use it, that's okay. In this case, it's one of the 7 ways you're accidentally improving your credit. You don't apply for credit a lot.
Exactly.
How does that affect you if you have a lot of inquiries on your credit?
Well, the thing is, when it's a credit-seeking inquiry, like you're applying for something, even if you're applying with the intent not to really use it, just to have it, that inquiry is going to lower your score, right? And so the reason why that is every time you're applying for something, it's like there's a fail safe there. So if we're in beautiful Minnesota, right? If I went to Mall of America and I walked around all those stores, there's a lot of credit.
Yes.
There's a lot of credit opportunities, right? A lot of credit cards. Well, there needs to be something in place that if you're going through and all of a sudden applying for a ton at once, there needs to be something to finally ding it, like, hey, you're denied due to too many inquiries and your credit now is dropped, right? That's what it's there for. So you have to understand that. And, knowing that it lowers the score, you really want to always maintain, the strongest score and strongest profile possible. So I always let people know, only apply for something when you need it. It's going to serve a purpose. Maybe it's serving the purpose of, hey, I need more credit. Yep. Maybe you have a thinner credit profile and we need more.
Yep.
Then we should go out there and strategically build it over time, not in excess, to build it, right? But if you go out there and just continue to pull, you're going to have a lot of dings and your score is going to be lower because of it. And that shows more risk to lenders. It's like, hey, what's going on? You're applying for all sorts of stuff here. I know we have entrepreneurs that listen to this, business owners. One of the main factors that business owners get denied when they apply for a loan through their business is too many recent inquiries on their personal credit.
Interesting.
It's one of the biggest reasons.
Okay.
And that actually messes up a lot of people. I work with a lot of business owners and helping them obtain business financing and things. We have to be strategic because until you've built up and established a strong business credit score and profile, they will always pull off your personal.
And we did have a text question earlier about that. What's the best way to build credit for your business without personal credit exposure?
Yeah, and so that's the thing. There's a lot of advertising out there. There's a lot of companies that say, hey, build business credit without a personal guarantee. The reality is they are going to pull off your personal until you have sufficient business credit established.
Okay.
You just have to understand that they have to have, there has to be a way for them to leverage risk and make a lending decision.
Right.
So it's going to be off your personal. But what's nice is if you strategically build it, you want to build like business vendor lines of credit.
Sure.
Like a real estate investor like Sherwin-Williams, Home Depot. There's a lot of really cool stuff that you could do that you build through your business. They report to Dun & Bradstreet.
Yep.
And what's cool about business credit, it's all about, do you have it? Are you using it? Do you pay on it?
Yep.
And do you pay on time or early?
Sure.
It's all the net terms.
Okay.
It's, personal credit is very complex.
Yep.
There's so many different variations of the FICO algorithm.
Yeah.
Business credit is, do you have it? You use it? You paying it? Good. Keep going.
Keep going. 3, you don't use pre-approved credit cards. You don't use pre-approved credit cards. If you have a history of accepting pre-approved credit cards, your credit score might be lowered. Why is this?
Well, I think that really falls in line with the previous point too. It's like, if you have a tendency to accept a lot of pre-approved offers, when you pre-approved does not mean that you're actually approved. What happens is they're pulling data. They purchase data from the bureaus. They say, hey, based on this, we feel you're approved for this. You're a good candidate for this. Well, the thing is, once you apply, there's an inquiry. It's a credit-seeking act, right? So one, it's going to be low in your score. And then a lot of times, you may be obtaining cards. This is what I look at, as I'm coaching clients, is it's all about, let's find you the best card based on your current credit status at that point and how it's going to elevate it and grow it.
Yep.
There's a lot of pre-approved cards out there that aren't good, that have horrible terms, that aren't a good fit for you. And so it's like, it can really hinder you. It can lower your score. It can bring you back. And once again, it's like, if you do it too much, it's just going to ding you. It's not worth it.
How many times would you say that you've had someone come to you and say, I need to repair my credit, and their reason is, well, it said I was pre-approved, and then they declined me after I was pre-approved?
Well, that happens a lot.
Yeah.
That happens a lot. I would say the big banks are a big culprit of that.
Yeah.
There's a lot of big banks that market pre-approved offers. People apply, and they're denied due to credit all the time.
Because it's a numbers game.
Yep.
Right? If you get, they just blast it out.
Yep.
They send out.
Yeah, they send out envelopes that say you're pre-approved for up to $50,000 worth of credit on the front of the envelope.
Yeah.
Yep.
And then you open it up and it's an application.
Yeah.
That's exactly what it is.
Online app.
That's exactly what it is. And this goes back to our point earlier. If you're going to apply for something, there needs to be a purpose behind it. It's like, hey, I'm looking for a loan. I'm looking for a credit card because I want to grow my credit profile. I need a credit card, right?
Yeah.
But you definitely don't want to prematurely just constantly just apply whatever is thrown your way. It's going to really hinder you. Another thing too that I think about, what a client may go through, what a person may go through. There's also a lot of education on there about, hey, do you need to improve your credit? Do you need to build your credit? Well, hey, get this credit card. Hey, go and you need to have credit cards. You need more credit. And so that's very misleading for a lot of people who are trying to improve their credit, because now they're out there pulling the trigger on pre-approved cards and getting denied. Maybe they're getting accounts that are like, marketing, hey, get this card and build your credit. But the terms on that are not good. Like, in fact, here's a really solid example. Secured credit cards are very popular for people who have poor credit looking to rebuild. Well, the thing is, you want to find a secured card that graduates to an unsecured card.
Got it.
There's only a few like that.
Okay.
Most secured cards stay secured, and the only way to increase the limit is by funding it additionally yourself.
Does it say secured card on your credit report?
So in most cases it does not, but
Okay.
there might be a line item or description that may say secured.
Got it.
But in most cases it's going to show up just like a credit card.
Yep.